A registered nurse pays roughly 28% of her salary in taxes, while a billionaire worth $50 billion pays an effective rate of about 3%. You might assume they are breaking the law or hiding cash in duffel bags to evade the IRS, but they aren't. They are utilizing a highly protected, carefully designed financial system that operates entirely out in the open. The game isn't illegal, it's just played by a different set of rules. Welcome to Spectra Finance. I'm Viraj Sabharwal. If you know where to look, there are 4 specific legal mechanisms the ultra-wealthy use to erase their tax liabilities. Today, we are going to expose exactly how those mechanisms work. More importantly, I'm going to show you how you can apply those exact same rules to your own money. For most people, earning money means falling into the active income trap. You go to a 9-to-5 job, you get paid, and the government takes its cut before the paycheck even hits your bank account. The ultra-rich operate entirely outside that cycle. Instead of accepting a standard paycheck, they sit in boardrooms with an army of corporate lawyers and tax accountants. Their goal is to proactively comb through the tax code, finding every exception and clause available to shield their capital. Secret number 1, geography. Billions of dollars are quietly wired into offshore accounts in jurisdictions like the Cayman Islands, Panama, or Luxembourg, where corporate tax rates sit near zero. Secret number 2, the business expense loophole. That private jet is classified as necessary business travel. The mega yacht is a corporate meeting venue, and that $50 million Malibu beachfront property gets written off as a company asset. Secret number 3, the family trust. The ultra-rich don't legally own their wealth. They transfer it into complex structural entities. The wealth is effectively theirs to control, but the tax liability is passed on to a shell structure. Secret number 4, buy, borrow, die. This is the most powerful tool in the playbook, designed to ensure a billionaire never pays a cent of income tax again. Buy. They buy and hold stock, allowing it to grow without generating taxable income. Borrow. They offer that unsold stock to a bank as collateral for a massive loan, at a near zero interest rate, funding their lifestyle entirely tax-free. Die. When they pass away, their estate pays off the bank loan, and due to a legal clause known as the step-up in basis, all those untaxed capital gains legally vanish. You probably don't have a team of offshore lawyers, but the exact same mathematical principles those billionaires use are fully available to you right now. First, adopt never selling. Stop relying entirely on selling your time for an active paycheck and acquire passive assets. If you consistently invest just $100 a month into a standard index fund tracking the S&P 500, historical returns show it compounding into a portfolio worth over $1.2 million by retirement. Second, use domestic tax shelters. You don't need the Cayman Islands. Governments already provide legal wealth building tools, but most people never fully understand how powerful they actually are. In the United States, wealthy investors aggressively use accounts like Roth IRAs, 401ks, and HSAs, because these accounts offer major tax advantages while helping money compound faster over time. In Canada, accounts like TFSAs and RRSPs allow investments to grow far more efficiently while reducing tax burdens. In the United Kingdom, ISAs and SIPs help investors build long-term wealth with powerful tax-free or tax-advantaged growth. And in India, tools like PPF, ELSS, and the National Pension System give ordinary people legal ways to reduce taxes while building future wealth. The systems already exist. The difference is, the wealthy study these accounts carefully and maximize them early. Most people either ignore them or never learn how they actually work. Third, leverage corporate expenses. By establishing a basic corporate structure, like a freelance LLC, you gain the legal right to deduct everyday business expenses from your taxable income. A freelancer can legally deduct the cost of their laptop, phone bill, and home office space to dramatically reduce the amount they are taxed on. Fourth, master patience. If you buy a stock and sell it a few months later, the government taxes that profit at your standard income rate, which can hit up to 37%. But if you simply hold that exact same asset for over a year before selling, your tax burden drops to the long-term capital gains rate of 0 to 15%. Patience is the ultimate, entirely legal loophole. The ultra-wealthy keep their money out of the IRS's hands simply because they have the knowledge to do so. Ignorance of how these financial vehicles work is the only barrier keeping you from protecting your own capital. If nobody has ever shown you how to play this game, hit that subscribe button. Here at Spectra Films, we drop a new video every week to decode the system and give you the tools to build real wealth. Share this video with a friend who needs to wake up and see how the math actually works. If this video opened your eyes, subscribe to Spectra Finance. Every week, we break down wealth, investing, business, economics, and the hidden systems shaping the modern world. And before you leave, comment below. Which of these billionaire strategies shocked you the most? Do you think the system is unfair? Or do you think most people were simply never taught the rules? I read every comment.